Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Sanwaria Consumer, one of the stock on which I have made a lot of videos last year, and I have been very skeptical about the stock from levels of around 15 to 20 levels. So let's understand what is going on in the company and what needs to be done. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I start with the analysis on Sanwaria Consumer, here is a small request that kindly support me through Patreon, and even a $2 support a month would go a long way in helping the channel grow further. And I would like to make more interesting videos and analytical videos on different stocks that you provide me with. So kindly go to the Patreon channel. There are different tiers of $2, $5, and $10, and also $25. So go ahead and look at it, and if you feel like, you can support me through there as well. Now about the company, it is in the FMCG business with multiple products. Was in edible oil till recently, but it was incorporated in 1991. And actually, food processing market in the Indian market between in the late 90s till in 2000s triggered the change into an FMCG business for Samaria Consumer, and it has shown high sales and profit growth up till now, but recent results and management integrity is under question, and that's why the stock is trading at 1 rupee. So before that, it was showing growth of 40% on the bottom line and 25-30% on the sales front, but it seemed unlikely that the company is doing that well, because on the ground it seemed like they were not gaining any market share, yet the results were shown of that quality. If you look at the financials for the Q3 FY20 numbers, then the sales went up by 600%. But look at the profit. From 10 crores profit, it has come down to 681 crores of loss. Raw material cost has surged extremely over the last 1 year, and other expenses are up by 25 times. Now what are those other expenses? We don't know the details as to what constituted those other expenses, but they are up something like 25 times. So one needs to have an understanding of what goes on behind the scenes or what goes on in the numbers, and bottom line has to support the top line. So the sales could be of over 2,800 crores, but where is the profit? There's no profit, no returns ratios, etc. And the company has been producing such kind of numbers or erratic numbers for the last 1 year, and that's why the stock plummeted from around 22-24 levels all the way to 1 rupee, because there were conference calls of the management on which I have made videos. So go ahead and watch those videos, that those were made a year ago or so. And in those conference calls, the management could not answer clearly some of the doubts that the reporters or the analysts were having in terms of the products they were selling, in terms of the markets and they were selling, and the kind of market share that they were having, and what they were gaining over the years, because the company was producing 30-40% profit growth, so they must be gaining market share in the FMCG business. So all those things were not answered. Plus you add to that the fact that they were increasing liquidity in terms of increasing more shares in the market. So they were having more shares in the coming in with more shares in the market and getting money out of it, but where they were spending that money or where they were deploying the money, etc., it was not very clear, and eventually it came to light that the company is making losses. Now I don't know in the earlier numbers whether they were not quite right, and they were not showing that they were making losses earlier, but at the moment the company has gone into deep losses suddenly, and that tells you a lot about the company's management in terms of the financial integrity that the company was maintaining, and that's why the massive sell off in the stock. Before I talk about the performance of the company, I want to tell you one more thing, that that the company was never paying dividends. So dividend was also an issue, that when the company was making so much profits, then why the company was not paying dividend. The company said that they were into expansion mode and they were expanding because there was a need to do that, because the demand was a lot for their products, and they would sell at the same rate later on if the expansion continues. So all these things came to light during the conference call, the couple of conference calls that they had last year. Also, one needs to understand that they were quite confident about the business, etc., but eventually the numbers told a different story. About the performance, the stock has underperformed over the last 2 years. Numbers have been very bad, as you have just seen. Although initially the numbers were good, but now we see the kind of number that they are producing on the bottom line. A sharp rise in losses and expenses, as is mentioned, and corporate governance issues have clouded the company. And whenever there are corporate governance issue with any stock, then you see what happens to it, whether it is Manpasand Beverages, Vakrangi, you have Coffee Day Enterprises, or many others, and now you have Savaria also. Now, interestingly, the debt was zero, and it was a debt-free company till 2018 or FY18. And later on, now, as I see it on different websites, business websites, the debt is around 1,000 to 1,200 crores. Now, I don't know from where this debt came about just immediately, and these are the reasons, or these are the skeptical points that makes an investor very fearful of investing into such a company, and that's why the stock has troubled down to something like 1 rupee. So what went wrong with the company? The management commentary not backed by action. So as I mentioned, that during the conference call, the management was very gung-ho about the business, and they were going to do 30-40% sales growth, profit growth, and 20-25% sales growth. The margins would be really good. Debt would be remain zero, and they would not take any debt from the market, etc. The debt has increased, especially as a consumer company. The debt of 1,000-1,200 crores is not quite what people might expect, and is not quite what is expected of any company which is in the consumer business. So one needs to understand that equity dilution from time to time, so it has been happening for the last year and a half, and that has also spooked the market, because if you have a lot of stocks in the market, then it is very difficult for the stock to go up, because it will require a lot of buying for the stock to go up. And we have seen that happen in the case of Future Consumer, and we see where Future Consumer is at the moment with debt and with pledging, etc. Now here also debt is there, not a lot of pledging, but equity dilution was taking place continuously every quarter, and that has led to a lot of selling as well from the investors. Bottom line, losses has triggered a complete sell off in the stock, and that's why we see the stock trading at around 1 rupee. So what needs to be done? It is a complete avoid at the moment. Sell and run from this stock whenever you even at 1.5 rupee. This could go to even 20 paise, because nothing is happening, and such heavy losses could continue. Exit whenever there is a strong rally. Although in this market, this is very difficult to find a rally, and focus on good management pedigree and nice stocks which are making a lot of profits, debt-free companies, and have a good management commentary. So the commentary is backed by action, and only have 5% or less than 5% in your portfolio of such stocks. So this was my video on Sanwaria Consumer. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.